just have you seen any signs of the policy interest rate increases passing through to some of the key lending areas such as cars, mortgages, or consumer lending?
I believe that we have not observed that. Well, from a banking perspective and my own exposure to banking, we have not seen any increases, any pass-through effects of that as yet. I can't speak to it in terms until I get a full report from the Bank of Jamaica saying exactly what you're going with, where weighted average lending rates are at this point in time. But in the public space and from my own personal experience, we have not seen any adjustments upward in interest rates so far. What we know is that with the Bank of Jamaica monetary they're executing their monetary policy, what we see is that interest rates on treasury bills, interest rates on Bank of Jamaica CDs are going up, and that will have an impact on the cost of funds of the commercial banks as they do business with the central bank. As liquidity, there will be a contraction of liquidity, and there will be also an increase in interest rates from authorized dealers, primary dealers, in terms of of borrowing from the central bank, or getting liquidity from the central bank. So interest rates would have gone up. But I have not personally seen where that has been passed on to the consumer as yet.
From your research, do you have any view as to what a Bank of Jamaica target policy rate might be, or terminal rate going forward?
They're going to watch it on a month-by-month basis. As we, just recently we saw commodity prices kind of trailing off and coming off from the highs of from over $80 per barrel down to in the mid 60s. So we expect starting to release their November numbers very soon, and then we should see what the Bank of Jamaica's response will be. The Bank of Jamaica will be meeting, the Monetary Policy Committee will be meeting to assess. However, what we know is that globally, inflationary expectations remain still very high, and we see central banks moving across globally. So we could be in for further rate increases, which, as we said, has implications.